Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters. Well, the markets had started off the September series with some green. From the highs of the day, we have seen some selling pressure. The Nifty is as flat as can be as we speak. We have Bajaj Finance. That stock has come off the high point of the day. Mahindra & Mahindra as well is dragging the index. And in the last few minutes, the reason that in fact we have seen such a sharp fall is because ITC, suddenly we are seeing some selling pressure there. Remember, the stock was moving towards a 52-week high. And from that top, in fact, some mild profit booking is what we are seeing. Remember, it's a rather large weight on the index, so that moves lower. It definitely takes the index lower as well. Keep an eye out on Yes Bank. That stock is down close to around 5%. I wonder when really this bad news gets priced in, because on August 20th, or on that date itself, Yes Bank was 404 rupees. So from that top, the stock has corrected a good 15% approximately. So let's see, this uncertainty, the street doesn't like it, but let's see when in fact that gets factored into the share price as well. And the other big boy, ICICI Bank, 20% in a single series. That's in the August series. Today, in fact, some profit booking on that one as well. And that explains why the Nifty Bank is doing a relative underperformance, Mangalam. That's down 100 points, while in fact you have the Nifty as flat as can be.
Absolutely, Nigel. You said it. ITC took the Nifty lower right now as we speak. But if you just pull up the contribution chart, that's telling you that over the last couple of trading sessions where we were soft, it was primarily on account of Reliance, which is corrected from the high point of the day. And currently today, too, the biggest drag on the Nifty is Reliance. Yes, you did speak about Yes Bank. That has just about 1.5% weight on the index. But today's 5% move has meant that, it's shaved off around 8 points of the Nifty. And the Nifty Bank, where it has just about 5% weight, there too, it has shaved off nearly 72 points. So that's as far as Yes Bank is concerned. The only bit of green that one has is from the IT pack because of the weakness of the rupee, breached that 71 mark. In fact, all the IT stocks as we speak are at the high point of the day. Pull up something like an HCL Tech or even something like a Tech Mahindra.
Yeah, a couple of other stocks, Mangalam, from the broader markets that used to be part of the Nifty. Something like a Bosch. It was moving so well in the last couple of trading sessions. Today, it's come in for some profit booking. So just keep an eye out on that one. And JSPL as well. That stock was seeing a big run. Suddenly that one as well, there's some money being taken off the table. It's had a big run from around 210 to around 225 odd. But today it's seeing some selling pressure. Remember, 230 rupees is when they raise fresh money from the market. So that's a level you should be looking at. Whether or not it can get past that level, and once it gets that, then it gets past that, then in fact it's a positive sign. So we'll keep an eye out on that front as well. But let's get straight to the headlines then.
Absolutely, we will get straight to the headlines. Just before that, there is a flash. Idea says the merger with Vodafone to generate 14,000 crore worth annual synergies. Remember, yesterday we broke the story that Idea has received the NCLT approval for the merger with Vodafone. So we will keep tracking that story. First up, all the headlines. The rupee hits fresh lows, crosses the 71 mark against the US dollar. Higher crude prices coupled with month-end demand for the dollar exert pressure.
And Yes Bank reacts negatively to the uncertainty around Rana Kapoor's extension as the MD and CEO of the bank. The central bank gives a go-ahead for reappointment only till further notice.
All decks cleared for Vodafone Idea merger as NCLT gives a go-ahead for the deal. The combined entity will create India's largest telecom company in terms of revenue and subscribers. Out of the total synergies, there will be around 14,000 crore worth annual synergies.
And HCC sinks in trade. NCLT admits a plea filed by operational creditors who initiated corporate insolvency resolution process against Lavasa Corporation under the IBC. Okay, we're moved into the red now. We have done a bit of a U-turn from the top, but let's pull out some of those Asian markets. Actually, let's see how these Asian markets are doing, whether or not, there is some incremental selling out there, because otherwise we were doing a relative outperformance. Even though the Asian markets were in the red, still the Nifty opened up. It went to a gain of around 40 points odd. The Hang Seng, it was down. Already it was down close to around 1%.
From the lows.
From the lows, actually, it's recovered. It was down, I think, 1.3%. Maybe we should get the intraday chart of the Hang Seng, because those markets were trading in the red. We were doing a relative outperformance. But now, in fact, it appears there is some profit booking that's creeping in there as well. We should get the intraday chart of the Hang Seng.
It's recovered about 180 points from
exactly.
the lows. So
that's the chart that we're talking about. So no incremental bad news coming in from Asia. But it seems, after having 500 points in a single series, in 2 straight series actually, in July you got 500 points, in August as well you got 500 points. So this could be some routine profit booking. But what's the level that you should be looking to buy the Nifty, or are we going to see a bit of a down day? Ashwini Gujral joins in on this Friday morning. Hi Ashwini, good morning. We are down 10 points. We have corrected 50 points on the top. Would you be using this opportunity to buy into the index, or do you believe that we could have a bit of a down day and shorting the index will make some money?
See, it's important to understand what the market action is doing. You have all kinds of bad macro news, but Bank Nifty is not able to fall even 100 points. I mean, you're still hanging on to 28,000. The message there is that, yes, it's a bad news, but market is not reacting to bad news. And the moment, the macros turn a little bit, like, $2 fall in crude or rupee recovers, 25, 30 paise, you will see a lot of big rally. So obviously intraday things keep changing, but if anybody wants to take a positional long, this 27,900 is a fairly decent stop, and it appears that the rupee sensitives will hold on to the market till the macros come back into our favor. So for the moment, each time you get closer to say 27,900, 28,000, you should buy. Now the Nifty or Bank Nifty is not likely to show you big moves on the upside till this issue is resolved. But overall, I would call this a strong market instead of a weak market. So buying on dips will produce results. Having said that, IT and pharma are looking fairly strong. So PEL is a buy with a stop of 3,200, target of 3,320. Tech Mahindra is a buy with a stop of 750, target of 775. And Dr. Reddy is a buy with a stop of 2,400, target of 2,510.
Right. Ashwini, a word on Welspun India. That stock should come up for you. Currently, the top traded stock on the index right now. The volumes are spiking. It's recovered about 5% from the lows, 8% up this week, and around 27% this month itself. There you have it. Welspun India. A view on that one? It exports a lot, so perhaps some bit of fundamental reasons for the rupee weakness benefiting Welspun India too.
See, basically, everything which is an exporter is now going to start moving higher. So most of these stocks, mid-cap types, which have been coming off, Welspun used to be India used to be a 100, 120 rupee stock. So it's made a bottom at about 4,800. I wouldn't be surprised, if you get 88, 90, because from pharma and IT, everything which exports anything is now likely to move up, because that is the persistent theme right now in the market.
Okay, all right. Thanks so much for that, Ashwini. Well, before we slip into a short break, I think we just pull up the intraday chart of Yes Bank Kamangalam. That stock was struggling, but I also wanted to pull up a futures plate. You track the total open interest on this counter very closely. Now, normally it is at around 4.5, 5 crores, 5.5 crores as well. Where at the start of the series, after today's edition, there is more than 7 crore shares on Yes Bank. So you need to keep an eye out on that very, very closely, because that's much higher than normal levels. So that's just something. At the start of the series, you have 7 crore shares on a counter that normally you have just around 4.5, 5 crore shares or thereabouts.
Absolutely. So we will watch out for how this pans out over the course of this series, especially after the note that came from the RBI yesterday. With that, we'll on to a big CNBC exclusive. On his 88th birthday, the Oracle of Omaha, Warren Buffett, sat down with CNBC's Becky Quick, talked about his investment bets and why he likes Apple, why he thinks Jerome Powell is a terrific chairman of the Fed. All that and more right up.
If you had your choice between buying and holding a 30-year bond for 30 years or holding a basket of American stocks, there's just no question you're going to do better holding stocks. So it's more attractive than, considerably more attractive than fixed income securities. That doesn't mean they're going to go up or down tomorrow or next week or next year. But over time, a bunch of businesses that are earning high returns on capital are going to beat a bond that's fixed at roughly 3% for 30 years. And it's not my field of specialty, but actually they look, stocks generally, which are their businesses, they're American businesses, 30 trillion worth of them, and they look cheaper than generally real estate.
Is that the only thing that makes stocks look attractive right now, is the comparison with fixed income?
Well, that's what you have to do in investing. I mean, you're sitting with some cash in your pocket, you've had savings, and the question is, what do you do with it? You can buy a duplex next door and rent it out to people and do fine over time, or you can buy a small piece of farmland or something of the sort, or you can put it into something fixed income, bonds or bank deposits or whatever it may be. And stocks, if you look at American equities, American businesses earning a lot of money relative to the capital put in. And the reason stocks are worth a whole lot more than they were 20 years ago or 50 years ago or 100 years ago is companies have plowed back part of the earnings. With a bond, you get it all out in interest. You know, you get your 3% or whatever it is, and that's what you have. With stocks, you get maybe a 3% dividend, but they're plowing money back, or they're repurchasing shares or doing something.
There was a filing that came out not too long ago that showed Berkshire Hathaway was continuing to buy shares of Apple. That stock is also at a new all-time high last night. It's now, you own 5% of the shares outstanding of Apple. It's the biggest holding for Berkshire Hathaway at $56 billion. Have you continued to buy even since that filing?
We bought just a little. About 6 million of the shares are attributable to another fellow for a considerable period of time. The rest are my portfolio, but I bought just a little bit. I like to buy them cheaper. I mean, it's very difficult. I started buying when the stock was maybe 100. And I was buying it kind of as fast as I could, and then I ended up buying some as high.
I spoke with an analyst today, Gene Munster, and he pointed out that the interesting thing about Apple is that for a long time it was a very volatile stock. It kind of traded in this boom and bust cycle. Every time they had a new phone that came out, it would push the stock higher. If they didn't have a new release, it would drop. He said that it's still 65% of the business, but a lot of people are maybe looking at it a little differently, and he wonders how you look at it. Is this a boom and bust cycle, or is there something different here?
Not in the least. I don't, I like to see the new release do well, or, that, but I do not focus on the sales in the next quarter or the next year. I focus on they won't tell you exactly how many, but hundreds and hundreds and hundreds of millions of people who practically live their lives by it. And if you look at that little piece of whatever it is, that is some of the most valuable real estate in the world. I mean, that is, Fifth Avenue will never come close to that. I mean, it is, you've got hundreds and hundreds of millions of people with loads of buying power and able to do business or learn information or whatever it may be, and it's part of their habit of living. I mean, they spend hours a day, and it does all kinds of things for them. So that real estate is worth a fortune, and it's nice to have it added to as they sell new phones, and of course a lot of them are replacement phones, but they're adding to hundreds and hundreds of millions of consumers that are never going to get to Fifth Avenue, or they're never, and you are an indispensable part of their lives.
The president, Donald Trump, tweeted out and talked in an interview about how he doesn't like to see the Fed raising rates. What do you think about that, just as somebody who watches it?
I think Jay Powell is a terrific chairman of the Fed. I've known, not known him well, but I've known him. I know people he worked with, and I've listened to what he's had to say. So I love the fact Jay Powell is chairman of the Fed, and he will do the right thing. As he gets a lot more figures in than I do. I may get them a little faster on some things than the Fed. They may work their way through, but he will see it, and he'll do what, in his judgment, is best for the American economy over time. There isn't any question about that. And maybe he'll make mistakes. I know I'll make mistakes, but he knows what his job is, and he'll do it.
Stock continues to do well. That has spiked up in the last few minutes. It's up close to around 3.5%. NMDC, that's another stock. Remember, here on CNBC TV18 last week itself, we told you that they went ahead and they hiked prices. 4.5% to around 5.5%. That's the price increase that they took about. And in fact, from then, the stock has really taken off. We had the management as well last Friday itself. They were clarifying that yes, the prices have been increased and dispatches have been improved. in August as well. Now we'll have to wait by for the official data coming in and see how the dispatches have improved in the month of August. In Karnataka, there was some offtake that was not really, not really picking up. But the NMDC management told us here on CNBC TV18 last Friday that yes, that's picking up. So last week chart really should come up for you, and that will show you the way the stock has moved from around that 100, 203 mark to around 113 odd. So keep an eye out on that one. Well, you may soon have to shell out more for your laundry owing to a surging raw material cost and the weak rupee. India's leading detergent makers like HUL, Jyoti Labs and P&G, they're all set to hike prices by around 3 to around 5%. Priya Seth joins us with all those exclusive details. Priya, give us those details.
Well, absolutely. In fact, key detergent makers, including HUL, P&G, Jyoti Labs, are all set to hike prices of detergents. Now, the main trigger as far as these hike in prices include the increase in the raw material costs, surging crude, as well as the weak rupee. Now, we understand from our sources that Jyoti Labs is planning to take a selective price hike for the detergents business, and it expects to take a weighted average price hike of 5% for the detergents portfolio. We learned that price hikes will be taken for brands including Mr. White, Hengo, Ujala, as well as Check. And the new products with the new price tags will be rolled out starting October. Meanwhile, we also understand that HUL is likely to hike prices of their flagship brands, including Rain, Active Wheel, and Surf Excel. And these price hikes will be in the range of about 2 to 6%. Several of the products have already started trickling in at the wholesale level, is what we learn. P&G, which manufactures Tide, is also set to hike prices in the range of about 3 to 5%. Now, Ghadi detergent maker, which is of course the second largest in terms of market share, it's manufactured by RSPL, is also still to decide as far as the price hikes are concerned. Now, we did reach out to all the companies. HUL said that they have no comments to offer on our query. P&G said that as per policy, they cannot comment on pricing. Jyoti Labs has confirmed select price hikes across the detergent portfolio, and RSPL is saying that they have taken note of the rising raw material prices, but no decision on price hikes taken so far.
All right, Priya, thanks a lot for that. This is something we will keep an eye out on, and it's also important because remember, this perhaps could be one of the first few price hikes after the GST rate rationalization, and all these companies did have a run-in perhaps with the anti-profiteering authorities. Meanwhile, just keep an eye out on individual stocks from the market. Some profit taking is underway. Something like a Bata, that one should come up for you, has given up about 3% from the high point of today's trading session. The stock's been a big mover, up about 45% this year so far, and a large part of the gains have come in this month itself for Bata, but currently seeing some bit of profit taking, down about 0.8% after rising 18% in this month itself. What is trying to bat for the bulls right now from the frontline space? We have the heavyweight L&T. That one should come up for you, currently at the high point of the day. That one's had a good month as well. It's up around 5% for this month and currently adding 1.5% as we speak. Trying to bat for the bulls. The Nifty absolutely flat. But one stock which is reacting negatively in today's trading session is Yes Bank, and that negative reaction is owing to the uncertainty around the leadership. Rana Kapoor's extension as the MD and CEO of the bank. Lata gets in. Lata joins us for more detail, more color on that. Lata?
Well, we are only trying to guess from that one sentence that we have. The Reserve Bank has informed that Mr. Rana Kapoor can continue as management until further notice. How much more can you parse that statement? I don't know. It looks like just a matter of delay, that RBI is taking time to make up its mind. It asked the board to revalidate the appointment. That was Ritu's story. And the board revalidated and said, yes, we want the same candidate. And then the Reserve Bank probably had only 48 hours to come back and do its own thinking on it. And therefore, it just has said until further notice. It wants more time. What can we draw from this? Clearly, it's unhappy about something. Now, the letter doesn't give details, so we have to guess that divergences in the bank's reporting of NPLs vis-a-vis what RBI thought it should is the one that's angering the central bank or upsetting the central bank. The RBI also has to take into cognizance that the divergence difference as a percentage of the book for Yes Bank was pretty significant. I think they reported something like 1.5%, 2%, and it actually turned out to be 6% for FY17. Axis Bank reported, I think, 4.5% or something, and then it turned out to be 5.5%. So as a percentage, the divergence, the crime was the same, but the extent was probably more in Yes Bank's case. So for similar problems, can you give a dissimilar treatment? But were there other reasons why Axis Bank CEO was not extended? All these are only questions that we are left with. For the street itself, it is an extension of uncertainty. Extension doesn't mean that it is going to be a yes. It could be a yes. It could be we are going to give you more time and in 6 months, please find another guy. Or it could mean that we have gone through our legal processes and we think you need 3 months. So we are none the wiser than we were say 24 hours ago before the letter arrived. That's what most of the, or not most, many of the brokerages are telling us. Jeffries says that the street will react negatively, but look at the but. They retain a buy with a target of 445, a good 100 rupees over what it is today. CLSA again says, awaiting the nod, they too have a buy on the stock. And Morgan Stanley, their rating is overweight, target price is 400. And they say that this will lead to short-term volatility in the stock. So everyone thinks negative for the stock. Everyone has a higher price target.
Okay, all right. Thanks so much for